Good evening, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading's Miami office down in sunny South Florida. Today's date is Wednesday, June the 26th, 2013, and here is today's After the Bell Market Summary brought to you by WallStreetTrading.com. I want to first start by taking a look to see how the indices closed the session out here for the day. The Dow Jones closed up 150 points, the Nasdaq closed up 28 points, the S&P 500 closed up 15 points. If we take a look at the breadth on the market today, a bit mixed here today. We had 3,925 issues advancing. We had 2,185 issues declining on the NYSE, Nasdaq, and the AMEX. So breadth was in favor of the bulls today, but not on a big scale ratio or anything like that. Pretty much a little over, close to a 2-to-1 ratio in favor of the bulls there. So let's going to break down these charts here, starting off with the SPY, the S&P 500 ETF. We got a nice little bounce off the 157 level on Monday from the back test of the support range I have highlighted there. We've been kind of just gapping up higher for the past couple of days here and then trying to chop around intraday. Yesterday we had a crazy wild day. Today was a little bit more controlled on the intraday action. Again, this 161 area is going to be a key area of resistance from this little support level right here, from the trend line break, and then from these declining moving averages. So we have three forms of resistance right here, this 161 level on the SPY. I'll definitely watch that level pretty closely if you're trying to take some positions here and swing trade them. At the same time, we also have this bounce action that we've been getting in the market the past few days here has been on low volume compared to the selling volume that we had, so make sure you take that into consideration as well. Levels you want to watch going to tomorrow, it looks like that 161 level could come into play tomorrow on the SPY if we gap up a little bit. At the same time, you want to be watching today's lows on the SPY as well. If we take a look at the ES action here, since this is what we track intraday in the chat room, ES, let's see, ES trying to break over 1600s today. Going into the last hour of the session, we were not able to break above it. The main level we want to watch in the ES looks to be around the 1610 area. That was a little breakdown that we had right there. So we got about potentially 10 more points to the upside before we see if the sellers try to knock us right back down and form like some type of lower high off of these lower highs that we formed back here. This lower high, this lower high, lower high, lower high, lower high. So we'll see how that plays out. If we take a look at the triple Qs, the NASDAQ ETF, triple Qs got a bounce today as well. They gapped up a little tight range on the there on the triple Qs. Level you want to watch in the triple Qs is up here near the 71.45 area, and then you want to be watching today's lows. So actually, you want to watch today's highs around 71, then watch today's lows on the triple Qs. It had a small range, so we'll definitely see if we could get some type of outside bar action tomorrow. We definitely don't want to see another inside day of this action we had here today. That definitely means that tomorrow could be a boring day, but we'll see how that plays out. Keep a close eye on this 70-60 level. If we can hold above 70-60, which comes from this little pivot high that we made back here in September last year, that'll kind of be a good sign. The longer we hold above that little pivot, that 70-60 area, we could probably see if we can get a move back up towards these 72s. Even though I'm pretty sure it's not going to be pretty, as the market action has been pretty choppy, as some people are kind of, they want to kind of gauge the market to see what type of real strength we have here before they try to get involved again. Let's see here. This Friday will be the last day of the quarter, so we have some guys talking about window dressing some of these stocks, and we could have some more people taking up some positions off at the end of the quarter here. So either way, not expecting much action this week, but we'll see. I mean, the price action for the past couple of days has not been the best action to really trade. And you got to be selective with your stocks. I mean, some of these stocks that we've been watching have gave us some decent moves, but even then, the intraday action has not been the best. But at the same time, you got to make sure you're looking at the right stuff. Taking a look at the IWM, the Russell. The Russell is up 45 cents today. We're back above that key 95 level. We actually closed above it yesterday, but we got another higher close today. But we really want to see the Russell 2000 get back above 97 and start holding above 97. Then that would be pretty good. Volume on the Russell past 2 days, this little buy action we have been getting in the market here has been real low. You can see down there compared to the selling pressure that we had on this way down. So make sure you pay attention to that volume in some of these indexes and ETFs here. All right, let's take a look at the commodities here. Starting off with gold. Gold continues to get slammed. Just look at this ugly chart, the little inverted cup and handle pattern that we brought to you guys' attention here. 130, 131, all the way to 142. We're talking about $11. So $11 minus the 131 gives us a target of 120. That target was hit. The same thing that I explained in the midday market update that I put out today on the gold contract. That target of 1225 was hit, but there still looks like there's some more downside. So this measured move in this pattern was hit. So we'll see if we can get some some more downside action and maybe some bottoming tails or something that's going to kind of give us a clue for a reversal. Then we can maybe try to pick up some of these little gold stocks on the cheap. But in the meantime, the momentum in the gold sector is still there to the downside, so you want to be careful. Taking a look at the GDX gold miners, they were down 6% today. Of course, they're going to get slammed down with gold ever since we broke the 26.32 level here. They've been gapping down and just getting slammed to the downside. Not sure where all the selling pressure is coming in. Maybe it's from the data that's coming out now showing us that there's really no inflation. And maybe some portfolio managers are selling their gold positions going into the last part of the quarter here. So maybe their clients can say, okay, you got out of gold earlier, you didn't take a big hit in gold like some people, or maybe they're just selling some of these gold assets and start buying some of these different start buying some other stocks in different sectors that are going to be looking to perform better in the third quarter here. So that's kind of my thesis on what's going on with this gold action, since we are getting a bit oversold here. And momentum still to the downside. Just stay away from them if you don't want to short them. And obviously, it's kind of too late to go short them now, so I would just stay away from them in general and maybe look for a buy setup sometime in the near future, which is not right now. Taking a look at silver. Silver looks weak as well. It looks like garbage. Stay away from it. Copper. The basic material stocks continue to get hit. Copper's back down here below 3. And copper, the weekly and the monthly chart don't look too sharp at all as well. If you take, for example, FCX, which is one of the main copper stocks that a lot of traders watch, a lot of professionals watch, and a lot of institutions trade to participate in the copper, you can see this one has just been selling off, and it's just not looking good as well. I've been looking for this FCX to sell off, for the past couple months here, because if you take a look at the weekly chart, you can see a nice little head and shoulders pattern here. But it's multi-year head and shoulders pattern on this company here, and the fact that it's actually trying to hold below this 30 level now is a little bit interesting there. So the longer it holds below 30, the more I'll start to get bearish on this FCX, which I'm already bearish on it. But this thing could get slammed down some more. Just look at the pattern on the weekly chart. This thing really doesn't have any support until down here, until like around 21. All right, there's still some more room to the downside. So keep an eye on FCX. If the basic material sector continues to get hit, we're starting to see some buyers come into some of the commodity stocks like U.S. Steel. These stocks have gotten beaten down as well, but U.S. Steel has been getting some nice buying pressure the past couple of days. Maybe if it breaks past this little trend line action we have right there, we can expect some more top side tomorrow. So let me take a look at the 60-minute chart real quick. Yeah. 60-minute chart got rejected at the 200-day exponential moving average here, but keep an eye on this name. The name looks like it's trying to stabilize down here after this little double bottom action around this 16 level. All right, so that's one idea to watch tomorrow. If the commodities, the basic material stocks try to catch a bid, keep an eye on U.S. Steel. Let's see here. Let's take a look at that volatility index. All right, the VIX is back below this 20 level. It's back below 19. If it breaks back below 16, that'll give us a little clue that fear is starting to seep out of the market a little bit right now. So keep an eye on that 16 level on the VIX. If we get back above 19, that'll be the clue that fear is coming back into the market. So we're really going to be paying close attention to this little range right here on the VIX between 16 and 19. Before I forget, let me go over crude oil. Looking at the crude oil futures, crude oil is at 95.5 right now. Held up pretty decent today compared to the other commodities, and it's holding this nice little support here around this 93 level. You guys know that 92 level is pretty important as well for from the past couple of weeks. Every time it went to 92, they were buying it. So now if it holds a nice little high bid above 94, that'll still be a little bit bearish. It'll be a little bit bullish on crude, and we'll gauge it from there. As far as some stocks go that are in play, the solar stocks have been in play the past 2 days or so, past 3 days. Started off with FSLR. On Tuesday, getting a nice bounce, and a lot of people have been looking at these names. Then CSIQ came out with some news today that caused that stock to take off. CSIQ actually looks pretty good over 10.5. If this thing could break over 10.5 and hold, it looks pretty good. The weekly chart looks like it's forming like a bull flag off the little nice up move that it's been in since April. We also have been watching this SPWR inside our chat room. And again, if you have not been to our live chat room yet, it is mywallstreettv.com. The password to log in. Well, actually, to get the password to log in, you have to go to our website, wallstreettrading.com, and fill out the form on the right-hand side, and you'll get the credentials emailed to you within a matter of a minute or so. But SPWR, if the solar stocks are strong tomorrow, keep an eye on this one as well. Stock has a target up here towards 21.5, and it's at 20.29 right now. It's 20.30, so has about $1.20 left in it till it gets to the till it gets to the first target. So keep an eye on that one. At the same time, it's trying to break this little trend line right there, so that could be a little momentum push if it breaks above that level and holds. Let me just zoom in for the chart for you guys a bit there. 1 second. And you can see right there, the next target is actually 21, and then we have 21.64. So LDK, SPWR, FSLR, actually not LDK, but CSIQ, SPWR, FSLR, those stocks have been in play. The financials had a nice little bounce today. WFC, Wells Fargo was the leader today. You know, Citigroup was the leader yesterday. Wells Fargo was the leader today. Wells Fargo looks pretty good. You have a nice little range in the daily chart here between 39.50 and 41.5. So it's been trading in a $2 range here since I would say late May. So when the market does catch a bid, if it catches a bid and the financials are strong, you want to make sure you take a look at this Wells Fargo. What else? We had some decent action in the biotech today. I'm not sure if they had any news out in the sector, but Amgen was up 3.25% today. GILD made a nice little move today as well, up 3%. Then you had BMY, and you had Celgene. You had a couple of them out there that look pretty good. So we'll be watching these stocks again tomorrow to see if they get any follow through. Again, the basic material stocks were weak. CLF, FCX, Newmont Mining. And the fact that X showed some strength today in the basic material sector compared to the other ones, that means that's going to be a go-to stock when the market catches a bounce. So again, keep an eye on that. CHK had a nice move today. Not sure if it was news related. Still has a lot of technical damage on the chart that needs to be recovered on it before it looks pretty good. And that's about it, folks. Again, if you have not been to the website yet, check it out, wallstreettrading.com. A lot of free education on there. And if you're interested in trading with our prop firm, you can contact me at ccooper at wallstreettrading.com. We have offices in New York on Wall Street, and we have offices down here in Miami in the Coral Gables area. And that's about it, folks. Have a great day. Cheers.